All right, so we are going to be going over the simple scalper strategy as shown on IM Academy. Just diving a little bit deeper into the confirmations that you can check out to help yourself get into trades. Now, because we are going to be looking at the scanner as a whole, I am going to break down each of the indicators, but just maybe tell you something else that you may not have known or may not be using the indicator in that way. Again, if you have any questions, just feel free to stop me at any given time or drop a 444 in the chat if I am breaking up. Again, this is Simple Scalper Advanced. Now, because we're going to go through the trading checklist, this is something you want to do before every single trading session. Always check forexfactory.com. And here you're just checking the news, checking the temperature of the market to see what's really going on. And I already know there's no news going on between now and tomorrow.
Yeah.
So we're in the clear to trade anything that we want. And this is in regards to Forex and HFX. Now, if we would have saw a red folder, we would want to avoid that pair. If we saw an orange folder, we would take our time. And if we saw a yellow folder, we would pretty much keep going. I always like to draw this visual because this is going to be somebody's first time watching this video. So the goal of you trading and looking at the market to figure out if it's safe is you want the market to stay between these two lines. Now, if you're looking at a market that happens to have a red folder by it, which is be similar to this right here, this is what you can expect. Right? You can expect the market to be going up and down and outside of the lines, and that's really not what we want. Since trading is risky anyway, we want to make sure that we are lowering or limiting our risk. Now, orange market will look like this. The top line is always where you sell, the bottom line is always where you buy. An orange market is a little bit more consistent, but there are periods where the market may break outside of the pattern that it's been doing, hence causing you to have a trade that hits stop loss or you may get spiked out if you're doing HFX. Now, yellow folders, again, same thing. The top line is going to be where we are selling and the bottom is where we're buying. A yellow market is more consistent. It tends to stay inside of the lines with not a lot of breakouts or fake outs. So does that make sense?
Yeah, because you spoke about this again earlier. So it and I when I seen it, I was like, wow. I was like, that really does make sense because if the orange folders, they're inside the lines, but here and there they have a spike out. So that makes sense. But I try not to trade any red or yellow orange folders at all.
Mm-hmm. I mean, the more advanced of a trader you become, you'll want to actually venture into these markets because if you know that the market doesn't go out of line that often, and it does, that's like, say, for example, this market is going up, down, and then it randomly has a low. We know that this would be a great entry to get in for a buy, and we can even take multiple entries here because we know for a fact it's not going to stay at that level. So the more you trade, the more you practice, the more you trust your analysis, it can do it quicker. You are going to want to look for those spikes because they're going to actually give you the deepest profits. But as a new trader, I never recommend people to do it because you can think you have a really nice setup and then the market has made a very unpredictable move. So yeah, girl. All
Mhm.
right, cool. So that's just a little visual representation of how to start to choose your currency pair. Again, whether you're using this for FRX or HFX. Step two, if you are using this for HFX, you're going to want to choose your currency pair based on what the payout is. And we just want it to stay over 70%. So right now it's early in the day. The New York session is still in full swing, and we have a lot of options. I typically just start from the left of the screen and work my way over based on what else is happening and if I could find a good trade idea. So I'm going to just start with CAD JPY. It's 83%. And cool. Now, next is live charts, right? And these are steps again that you don't want to skip. You definitely don't want to skip these steps because you're about to make a quick movement with HFX, right? Or you're really about to hold this trade. Think about it. If you're buying a house or buying a car, you're going to want to ask as many questions as possible because this is a longer term investment. So just make sure your analysis is thorough and that you do not skip these steps. So we chose CADJPY, and it's looking like a buy. With the CAD being the base currency, which is before the JPY, it has more bars. The first confirmation goes for the buyers. Now, I'm always going to recommend doing this no matter how long you've been trading. You want to create a little tally mark system for your buyers and your sellers. I see my CAD has more bars than my JPY, so my buyers are going to get the first point. Now, before we even get into the strategy, I always recommend using your demo, of course. And if it says CADJPY, let's test it out. It says we should go for a buy. Let's go in for a buy, right? Now,
Mm-hmm.
again, you only want to do this in your demo account because I like to get into a demo trade after every confirmation because that's just is building my confidence in my trade and is letting me know that this market is actually doing exactly what it said it's going to do. So by the time I take 3 to 4 trades in my demo and I get ready to go to my live account, I would be so sure because not only did my analysis make sense, but I cleared this trade. So as you can see, just based on this one single confirmation of the market, it said it should be buying. It looks like the market is buying. We do have 10 seconds left, but it's looking like a clear. So that's just giving me the confidence that I need. Is like, okay, this market is in a buying momentum. Let me collect some more confirmations to be sure, but that's a clear, right? So we know that if we were to go into our live account right now, we would have cleared that trade. But remember, you don't want to get into a trade based off of one confirmation. Hence, this is where our strategy comes in.
Okay.
So does that make sense? Like just to test out your analysis after every confirmation. Like if you get a yes, okay, I see a blue candle. Let me go in for a buy. Yes, I see that it's above the SAR. Let me go in for a buy. Like just to test it out.
Yeah, that makes sense. Cause that's the point. You should be picking them on point. That's the crazy part.
Yeah.
Every time. But sometimes you don't, but sometimes most of the time you do. So I don't know. I've been trying to like do the same thing. And that's what I say is crazy because most people, I don't know if you know if ever anybody told you this, like they do good on their demo account and then they go to their live account and they'll be like, what happened?
Yeah. I think people just get anxious because it's their real money. But I think that if you use your demo account more, like you're literally going to use your demo account so much that sometimes you really won't even know if you're in your demo alive because you just have that confidence. But most people spend so much time in their live account, they lose so much money that they get so shook that they only stay in a demo to build their confidence and they never translate it to their live account. It's just like, I don't know. It's a really deep, interesting psychological thing that happens with trading in live accounts. Like I've noticed people just it's a psychological thing. Like they just freak out or they just I don't know. I've used my demo so much. It's like I've made so much money in my demo. I've lost so much money in my demo. I just know it's possible. I know every trade can go either way. I know what my mistakes were. I know I need to slow down. I know I need to count all the confirmations. I know I can't skip one confirmation. I know that if my educator is telling me that I need 4 confirmations, then I need 4 confirmations. I'm not going to try to be flexible and use 3. Like I just know I just made so many mistakes. It's like you just know what to do after a while. Like after a while, like imagine having a new job and it's like you gotta learn. Then your manager be like, no, not this, this. After a while, you just be like, all right, I got it. They don't gotta say nothing to you no more because you made so many mistakes that you actually know what the right thing to do is. Um,
And that makes so much sense because now, since I didn't lost so much money, I've been like, no, I think I'm gonna just stay in my demo account. But I'm not gonna lie, I be having like moments. I ain't gonna lie, when I just be in my zone when I be trying to relax
mhm,
and have a little drink or whatever. And one day I was just high and I was just trading, but I was trying to do my demo account and I was trading with what's his name, Dale Woods,
mhm.
and was in my live account the whole time, but cleared 2 trades.
Yeah, it really be like that. Like when you just in it, and that's just the key to a real trading journey. It's like you just be in it. You know you're gonna lose money, but you know that at the end of the day, if you came here to be a millionaire, you haven't even lost close to $1 million yet. So how could you want to make a million and not be willing to lose $100,000? Like that makes zero sense to me. Like people
Mhm.
really want to be millionaires and they don't even people quit trading because they lost $100, but they say they want to be a millionaire. Like, come on now, that makes zero sense at all.
That's why I said it's like that's why when people are like you still trading and I'm like yes I enjoy it. It's the thing that to me is that I'm a math person,
Hmm.
period. And then I'm also a logical person. So whenever I see something moving, I want to know how it works. I want to know how it moves.
Hmm.
Like I want to know everything. I want to know all the little pieces about it. That's why I say whenever you speak about stuff about trading, I just be like, oh my gosh.
Yeah. Yeah,
I don't know if you see me in some of the calls when my camera be on. I'm like, oh my God, my mind is blown.
that is so funny because no, that's really how I was too. Like I used to get on so many sessions, like and be like, and that's why I will never stop teaching because I know with the live session, like getting on go live and hearing one little measly thing can just change your whole view on the market trading. You'll be like, what? Oh my God. Like I know the feeling because that's how I get. Like I still be learning stuff to this day, and I'll be like, wow. Like
Because
it just I still learn every single day, and it's just so exciting because the fact that there was more to know and I already know a lot is just like you can learn something that just make it so much easier. And it's like this is crazy.
yeah, because Vaughn had said one night he was just like, if you pay attention, I think it because in Cash Trap they got the DMI stochastic.
Mhm.
And whenever it hits like the 100 mark or the 0 mark, it's going to go for a reversal. And I was like, I thought I was the only one that noticed that. So yeah.
That is funny. Oh yeah, now that's actually what we're gonna learn about today is levels. Like just different levels and like what they mean and how to use that to even more of your advantage. So here we go. We on what's the thing called? We on Simple Scalper, and we just gonna talk about a little bit more about the indicators and like what they're actually telling you about the price. Just taking a little bit of a deeper dive. So firstly, I just always start with the top and go with the Bollinger Bands. So you know that you always want to ask yourself like certain questions. What color is the current candle? Are my candles above or below my purple dots or SARs? And these are the buy questions. Do I see a blue volume bar? Is my RSI, is my stochastic facing up? Right. These are just the basic questions that if you've been on a training with me before, you've definitely heard. But other questions you could ask yourself just to get even more confirmations. And we're gonna use this candle right here. So let me just build a little house real quick.
Yeah, and I just found the notebook that I wrote the confirmations in. I was wondering which book it was.
Yeah, girl, it's just so many, but it's like after a while you'll just memorize and be like, yo, this is crazy. All right, actually, let's go over right there. This is the perfect candle. This is beautiful. So let's pay attention to this blue candle. And if we were to ask ourselves the oh no, let's actually go with this one. Second one. If we were to ask ourselves the basic questions, we would know that this was a buy if we was doing HFX. We would know that it's a blue candle above the dot, above the blue volume bar. This is facing up. This is facing up. That's the perfect thing for a buy. Now the Bollinger Band actually has three lines instead of two, but it's never really too important that we pay attention to the third one, unless of course you're trying to snipe your trade. Now we can see on this candle right here, right? This is a blue candle. And
Mm-hmm.
we can just look down and we would have known this was going for a buy. Now, an additional confirmation is that not only do you want to see that the blue candle is crossing, like your blue candle should actually be crossing or above the blue Bollinger Band, but this little skinny black line right here, this is
Mm-hmm.
the middle Bollinger Band. So this is telling you essentially this is another moving average. So the top line is telling you if the candles start to touch that line, that will be a confirmation for a sell. If the candles start to touch the bottom line, that would be a confirmation for a buy. But this middle Bollinger Band is essentially telling you again if the market is changing directions or changing trends because it's the average. So once you see that the candle crosses above that line, that's an additional deeper confirmation for a buy. And then vice versa. You see the candle has crossed under the line, right?
Mm-hmm.
Even though
Oh, okay.
Yep, even though it was brief, we see the red candle cross under the line, and we see that the SAR changed. This was a red volume bar, and these lines were facing down. Like even though we were on an upward momentum, as soon as we see the candle has crossed under, automatically we know that the market is going to sell, whether it's for one candle, two candles, but we would have probably cleared these three trades off of that, knowing this would have been our entry point,
Yeah.
right? So just a little tip when using the middle Bollinger Band, this middle line is your entry point, right? So it would have been you could put a horizontal line right there, and it would have been at that line or higher for a sell. Even if you didn't have all the confirmations, it's an average, so that's a very strong confirmation that things are going to go the other way. Same right here on the blue candle. We see that the blue candle opened right there, and
Mm-hmm.
that would have been a great entry point, this line or lower for a buy. Now I'm gonna just zoom out a little bit so that you can just start to pay attention to that middle Bollinger Band and see when the candles cross under, do you see a strong selling trend? Once the candles cross over, do you see a strong buying trend? I don't have to zoom out too far.
Yeah, 16, 16, 100. I
Yep,
see.
right here. Yep.
Yeah.
You see the crossover and then you see all this, right?
Yep.
So you would have cleared all those trades, but if you was doing Forex, let's see how many pips you would have got, because that's 5, 10, 15, 20, 25, 30. In 30 minutes, that's in 30 minutes, you that's 35 pips.
And that's the trades I be loving all the time.
Like that's crazy. Because if somebody would have put $10 into this trade, they would have made $350 in 30 minutes on Forex,
Because I
right?
did do that one. I did put that in the Cosmic Club. I did trade that a forex trade, and I was like, "Oh gosh, she's just so smart. I just want to pick her head all day."
Nah, girl, I'm telling you, it's really just like I'm telling you, getting on Go Live, like get on Go Lives until you just can't get on Go Lives no more, because most people just get on there to make money. They're not listening for those gems. But if you actually listen on Go Live, you would be like, bruh, is this really real right now? Is she really telling me that this one little line is a 90% chance that the market's going to turn around? Now let's just we see it right there. That's a perfect example at 16. Look right here. It crossed over. Perfect example. Let's see
Up
how
and
many pips we
then
would have got over here. And this is
see,
based on a 5 minute scanner. Like you could have scalped this in
I
45
got
minutes. Oh my
27
God.
flips,
In 45 minutes. Looking at
28.
the 5 minute chart. That's outrageous. Like that's outrageous. Like and this is no hiccups. Like you would have just straight rolled that. So even if you was using a 10-cent lot size, you would have made $2.79. Now if you do that twice, that's all you need for your monthly. Like
It's
it's
daily.
that's your daily. So yep, I'm gonna just zoom out a little bit more and I'm gonna just scroll back to a random part of the chart. And again, just pay attention to that middle Bollinger Band and how it really is a huge signifier as to which way the market is going.
Another sale right there. I like that 1000 sale right there.
Oh, that would have been perfect right here, right?
Yeah, and then it
As soon
just
as it
kept on
crossed.
dropping, like even from yeah, right there, right
Mhm.
there. That was just crazy. And then it came back to that entry point.
Yeah, it always will, because think about, and this is something I learned from DeLorean, Patrick Kenny, because he's actually one of my favorite educators, is that the middle Bollinger Band, he said, is like a magnet. Like it's really like a magnet. So if it's at the top, the candles are always going to be trying to get back down to it. If it's at the bottom, the candles are always going to be trying to get back up to it. So think
Hmm.
about it like a magnet, and it's just like look at this
Oh. And then it's both ways. You could have caught that both ways.
right here and right here. Like it's just crazy, even if it's brief. So now that's on a 5 minute chart. Now imagine when you do start doing the longer analysis and you're using the Bollinger Band. That like the longer the trend, the stronger the confirmation. So let's just say we are looking at it on a 4 hour. And let's just say, sheesh, look at this.
Ooh.
Look at this. Not only did it cross over, like
And
not
then
only did it
still
cross
flip.
under, but it crossed under the EMA as well. Like, come on. If you get it under the middle Bollinger Band and the EMA, you're for sure making bread. And this is a 4 hour scanner. So let's see how much money we would have made. We would
I
have
wonder
put
if that was a consolidation though, because you see how it went up like a V?
right
It
here.
just went down and then went up. That's
Mm-hmm.
like nice.
Mm-hmm. Because remember, the middle Bollinger Band is a magnet, so we would have had it pulling back up towards it. And as soon as we would have got the crossover, look at that, we would have had a strong little trend right here, and then we would have it would have continued the trend, because the reason why you would not have gotten out of this trade is because you would have saw that it also crossed over the EMA, so you could have stayed in for another 4, 8, 12, 16, 24 hours and made more money. Now
And
let's
then
just
it's
see
a
if
four
we
hour.
caught the cross. If we would have caught this cross on pips, it crossed under the EMA and the middle Bollinger Band
Whew.
in 3 days.
Oof.
Like hold, don't fold. Like 3 days. Like that's a lot. That
I'm
is
not gonna
literally,
lie, I had to get into that Euro NZD today because when you said that, you said hold on fold.
yeah.
I said let's see how this whole week gonna go.
No, it's literally still selling. Like I got in like last night for 10 cents, and right now it's at $8. But it's going to keep
Wow.
selling. Like I'm really just trying to train myself to hold, because I remember when I first start. Well, not when I first started trading, but in January, I got into a trade and I didn't check it until March, and I just was like, not 30 cents turned to $500, like
What?
not 30 cent, because I just I did a 0.03 lot size and I just didn't get out the trade. Like as much as I was tempted, it went to the red. My analysis, I did it for 3 months, because I remember reading something and it said most people, well, not most people, but the average trader, like for trading like this, is held for 3 months. And I'm like, no, there's no way in hell I could hold this for 3 months. But I did it. I pretty much just opened a separate MT4 account, so I didn't really have to look at it. And whenever I wanted to do a long term trade, I just put it in that account, and I'm like, this is crazy. So I'm just getting back into that because you'll see, like the same way we're doing this analysis for the 5 minute, we can do it for the 15, for the 4 hour, and I know that if I hold this trade for 3 days, I'm going to hit at least 190 pips. Like
Yeah,
that's
because that's my only downfall with Forex. Whenever I see it go in red, and it'll just give me so much anxiety. And they, Catholic Kirkman say, if you get into anxiety, just get out. But it's just the point. Like I know it can go up, it can go down, and I just be scared to stay into this trade.
nah. You just gotta stay in it and don't look at it. Like you just gotta stay in it and do not look at it because if you know, like, look at this. Like, if I know, like, let's just say I took this trade when it hit this bottom blue. Now, I don't know how far it's going to go up, but I know for sure it's going to go up. So even if I only stay in this trade for 4 hours, even if I only stay in this trade for 4 hours, that still would have been 25 pips. Now, if I would have held it for the confirmations, 75 pips. Now, if I keep holding it all the way to the crossover, that's 230 pips in 2 days. Like, that's $23 off of 10 cents. Like, what? Like, just because you don't keep checking your trade, you keep checking the chart, like to see if it's still doing that same thing. But all right, so that's the middle Bollinger Band, and we saw. Look at this. This is just driving me crazy right now. Like, I need to see how many pips this is because that crossover,
That
anytime.
crossover is nasty.
No, it is like anytime you have a chart, any type of chart, anytime two lines cross, that's always a turning point in the market. Anytime two lines cross. So let's look at this beautiful cross, this beautiful sell. 2 days, 290 pips. Like, come on, that's still 10 cents to $30. And that's still a good $60 to $90 for the week that you could have made from 30 cent. Like, that's a lot from 30 cent. So that's one thing that you'll start to notice, and as you look, dive deeper into your chart, which is amazing. So let's just take this back down to the 5 minute. So cool. Um, the next thing that you also want to, well, we already saw how the EMA plays a role. If you notice that the candles are above the EMA, that's just a confirmation into
Uh-oh.
for a buy, a deeper confirmation for a buy. And if you see the candles falling under the EMA, that's a deeper confirmation for a sell. Now, if we zoom out, oops. Now,
Hmm.
if we zoom out, we can see for the most part, this market is on an uptrend, right? For the most part.
Yeah.
So yeah, we know at the end of the day, no matter what's going down, we should probably still be looking for those buys. At least for now on the 5 minute chart. Of course, you can take it up to the hour and see. All right, so all right, look, this is great. This is great because not only is it above the middle Bollinger Band, but it's also above the EMA. So we probably could get into this for a buy, which is good, but we're not gonna do that. So cool. Um,
You don't be scared when it's like the chart is like that, like when it's in the when the EMA is like in the middle, because that's the only thing I whenever I see a track, whenever I see the EMA like in the middle of the bulging bands like that, the purple EMA, I
mhm.
just be like, nah, I'm gonna find something else.
Well, no, because I know the EMA is just giving me the trend for the overall. Like, this is the 200 EMA, so it's just telling me for the last 200 candles, prices above average. But if I wanted to know, I could just click on it and I could just change this to 10,
Hmm.
and then it's only going to tell me. Well, let me change it to 12, so I could just know the average for the last hour. It's still above average for the last hour because it's only telling me for the last 12 candles, and 12 candles times 5 minutes is an hour. So
So,
even still, this is still looking pretty good for a buy.
so EMA, so since you changed it to 12, you said for a whole hour. So for a 5 minute chart, you can change it to a 12, a whole 12 hours.
Well,
I mean,
no, the length is telling you how many candles that you're looking for the average, like the average place of where price was at. So if I want to do 100, I just know that for the last 100 candles or for the last essentially 500 minutes,
hmm,
this is where the market was at. I just did 12 because 12 times 5 is 60, and that would just be 1 hour of average. Like, what was
yeah,
the average price for the last hour? So you can make it smaller, you can keep it at 200. But remember, the the stronger the confirmation. So we could keep it at 200 because we know price is still above average. Or you can do both, check the 200, check the 12, and then that's just two different confirmations. Like, damn, it's above average for the last hour and the last 500 minutes or 4 hours, you know?
yeah.
So that's that. Um, All right, so let's move into. We could take a deeper dive into the volume bars. Because the volume bars is pretty simple. As long as the color of the candle up here matches the color of the volume bar, it's just letting you know that the people that are the buyers, if the buyers are in control, it's just letting you know how much power they have to continue to pull the market that way. If the sellers are in control, it's letting you know how much the sellers have to pull the market that way. So let's just
Okay.
look, for example, right here, right? We see right here, right? We can see barely see any candles, right?
Yeah.
Now, that basically says, and we barely see any volume. So it's telling you nobody was in control, and like literally nobody was in control, and nobody had the power to be in control. Then right after that, look what happens. The buyers took control at the market after all this consolidation, and they actually came in very strong. Look at the volume bar.
Yeah.
So it's telling us that not only did the buyers take control of this market, but they actually have enough power to continue to drive this market up, which is what they did for 5 minutes straight. And that is a good 17 pips.
Hmm.
So even if somebody, this is actually 2 bars, 10 minutes. Even if you would have gotten to this trade, let's just say you would have put $2 into this trade, you could have made $34 in 10 minutes, simply because the momentum was very strong for the buyers. Like it took the pips from wherever it was at to 176 pips or 17 pips higher in the matter of a short span of time. And we would have known that was going to happen based on how fast the volume bar was building. So you can see how the candles, if it's consolidating, right,
Yeah.
it's going to be a reflection in the strength of nobody has control of the market.
Volume. Okay.
hmm And then we'll see a breakout. Let's just say this blue thing. We say, okay, the market is going to continue to go in the buyer's direction. So the volume just tells you how much power the side that's currently in control has to continue. Because sometimes you'll see a blue candle and you'll see a really weak volume bar. So you'll be like, damn, the buyers are actually running out of momentum and the sellers are about to take this thing. And you'll be able to see it based on how strong this is.
Have you ever seen like a volume bar that was different colored than the candle?
It's very, 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 very rare. Like it's
Mhm.
very rare that that'll happen. But I have seen that happen where it's like the buyers are trying, but they're literally losing momentum. Like if it doesn't match up, go with the color of the volume bar.
Especially when it switches. That's the only thing I really just cannot stand.
hmm Well, typically if you're using the 5 minute if you're using the 5 minute, you have like five every 5 minutes to get into a trade. So let's just say the time right now is 1:56. The last time we should have gotten to a trade was 1:55, but we know we have until 2 o'clock to get into another trade if we want to have the best entry. So even if it does switch, as long as you have your confirmations locked in by the time this gets to 2 minutes, that's the one I would go with.
Okay.
So let's see what's next. So down here, the RSI and the stochastic are pretty similar. Um, and they're just telling you if there's too many buyers in the market or too many sellers in the market because the market always has to even itself out. When you see the black line, let me make this thicker. All right. When you see, and let me change this one too. All right, there we go. So when you see this black line is in the middle. Wait, let me just make all this stuff thicker.
I do the same thing every time, especially the star.
I can't take it. I gotta see my lines here.
Oh baby.
Sorry, 1 second.
No.
Um, Dotted line. All right, there we go. Okay. Now something well actually let me do this first too. So before you actually start analyzing this, before we get into that, I want you to take a horizontal line and make it any color that's not on the screen. So I'm gonna make it lime green. We're gonna put it at the bottom. We're gonna put it at the bottom. We're gonna make it thicker as well. And I'm gonna do the same thing. And I'm gonna put one down here. Now, when you put these lines down here, click on it, and you're going to change the coordinates to 50. So it could be directly in the middle. So 50 there,
And I heard of that before.
50 there. Yeah, this just makes it easier for you because you can ask yourself more questions. Wait, hold on, I got another call, but I don't know what time is that. 2 or 2:15. 1 second.
Okay.
I'll be booked and busy.
I know you do. That's why I was like, I don't know if I want to bother her because I said I know she be having calls back to back.
I mean, no, but the that's because it's like not a lot of people on our team be like they'll show up to other calls, but for some reason they just don't be trying to learn. Like a lot of people left the business, and I'm like, it's crazy because I really be trying to educate y'all like on all walks of life. So you
I
can't say you're not
promise.
learning, you can't say you're not getting value, you can't say we don't care. Like I don't know what's up with people. So most of my one-on-ones are people that's outside of our team, but the priority, my time should be for people that's on my team. So I'm happy you booked the session. I'm happy it was time available, but it's just always time available
It's 1 o'clock.
for y'all before it is before outside people. So
Yeah.
so so cool. When we're looking at the art science stochastic, these two indicators, they're momentum indicators. One just moves a little bit faster than the other, so it's nice to have both. Or you can just actually delete one and only use one. It's completely up to you. So how I use this indicator is I know that if the black line, let me just zoom out. I know that if the black line is in between the red and the blue line, that the market is moving pretty consistent.
Mm-hmm.
If the line is facing up, I know that buyers are in control. If the line is facing down, I know that sellers are in control. To dig a little bit deeper into this indicator, if you see that one, the line is above the red line,
Mm-hmm.
that means that there are too many buyers in the market, is overbought and the market must sell. So as soon as you see this line approaching this red line, you know that your mind should already start to be thinking about sales. Even if the market is facing up, you should already be thinking about sales.
Oh, is it in my Wi-Fi?
Or oversold zone, it's not going to start selling automatically. Like, because it can be above this line. Oh, it says I'm breaking up.
You're good now.
Okay. Now one thing about this indicator is that even though it can be overbought if it's above the red line or oversold, if it's below the blue line, it is not going to go in the other direction automatically. And let me just show you
Mm-hmm.
what. So for example, we can see that, let me just get a vertical line. All right. So let's look at this candle. We can see that the market at this point, it was already overbought, right? At
Yeah.
this candle, well, in this candle, it was already overbought, but then it continued to buy, right? And it continued to buy. So just because it's crossed the line, don't mean you should automatically start looking for a sell, but you should wait for other things to align to know that that sell is going to happen. So for example, we would not have wanted to look for sales right away because it was overbought. It's going to continue to buy, continue to buy. However, what we do see, and let me just turn this line red too so that it makes sense. What we do see is that, and this is again why it's important to have your confirmation questions. We do see that the red candle has crossed and is near the Bollinger Band. So we would have had our first confirmation for the sell. Do you see a red candle?
Mm-hmm.
We would have seen the next candle also, right? I'm just moving the line over. We would have seen the next candle also had a red candle near the red Bollinger Band. Now
Mm-hmm.
it wasn't until, sorry, I need my pencil. It wasn't until this point, right? Where the market actually started to sell when it crossed back in the red line, which we have this candle. Wait, I could just draw it out. Sorry. Which we have this candle, right? We see that it was a red candle. We see that
Mm-hmm.
it was a red bar. We see that the line actually starts to face down. And
Yeah.
then on this candle, right, is when it officially has crossed and broken the line again. So whenever the candle actually breaks the overbought line, or whenever the candle actually breaks, let me turn my thing blue.
Can
Whenever
you
it
zoom in
actually,
a little bit? I'm sorry.
huh?
Can you zoom in a little bit so I can really see the candle?
Oh yeah, yeah, sure. Let me delete these
Because I
things.
really do like how the candle hits like that parabolic SAR, and then it pushes it down, and then it just pop up to the top.
Mm-hmm. So when you're looking for a sell, you know the things you're waiting for. You know you're waiting for that SAR to be at the top. You know you're waiting for a red candle. You know you're waiting for, let me get my pencil back. You know you're waiting for this cross down, right? This is a huge signifier that is going to sell. But not only do we have the cross down, we have the line facing down and the SAR on the very next candle. So
Mm-hmm.
again, we would have got the confirmations on this candle, gotten on this candle, and been able to take profit on all of these trades right here.
Yeah.
Just because we know that it officially crossed back down into it being equal buyers and sellers. Until again, let me clear this off, right?
It came back down again to that 86,200.
It came back down. So what you when you're looking for a sell, oh, let me put that line back real quick. When you're looking for a sell, right? Not only do you want to have the rest of the confirmations that you have, but it's even better if your line is either crossing down, like we can see here.
Mm-hmm.
So this is the first opportunity, and this is the second opportunity once it breaks the 50, right? Because it's telling you that
Oh,
price is very low and it's going to continue to drop, right? So we had one confirmation there when it started selling. Second confirmation when it went below 50, it's going to keep selling. That's exactly what happened. See,
yeah.
it crossed right there and then it continued to sell. So if we would have just waited it out, let's just see how many pips we would have got waiting on our confirmations and then continuing to collect them as they develop. And this is why you hold don't fold, because things keep happening. Like you see how it started in the sell, but then it
Mm-hmm.
continued to sell. Like the SARS was at the bottom. Now it's at the top. The volume bars, it stayed consistent, meaning this is a consistent sell, right? It crossed below the 50, but we wouldn't have known that if we did not stay in the trade. So from this in 30 minutes, that's 23. Wait, even more. In 30 minutes, that would have been 25 pips. So if you risk $1, you could have literally made $1, I mean $25 in 35 minutes.
Yeah.
Just by recognizing your confirmations and then having them continue to go in that
Keep
one
going down.
direction.
Yeah, because that's why I always try to check. Like I go from once I'm in the five, I try to go to that 30, that 15 to that 30 to that hour to that 4 hour, and from that 4 hour, I really know how far it's gonna go down.
Mm-hmm. And do you when you're doing that, do you wait for the right time to get in? Like if you're using the hour, do you get in on the hour? If you're using the 15, do you get in on the 15?
Most of the time I check on that 15, especially when I see it and I just know it's about to go crazy.
Mm-hmm.
Because most of the time, like the EMA could be like I said, the purple EMA could be in the middle, but I know for a fact that if JPY then took over and it grew strength, I know it's about to shoot down. But that's my only issue with is being patient because I'd be like, I know it's about to go down, but I want to get up to a higher um entry point to get in.
Okay. Yeah, that makes sense, but it's not about like it's like it is about
I
when, but
say the
also
perfect. Whenever you say a perfect entry is not the perfect entry, I feel it.
because it's really not like all you can do is just be like, all right, all right, all right, and
Just
then
take
wait
what you
for
can
the
get.
time. Like the timing is your most like time is really on your side when you're trading with longer time frames. Like if we're trading at on the 15-minute time frame, we want to only get in 15-minute increments. So let's just say we did get the confirmation for a buy right now. I'm not going to go in for a buy right now. I'm going to get in at 2:15 or 2:30 or 2:45.
But that
If
makes
I'm trading on the hour time frame, I'm only going to get in at 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock. If I'm trading on the 4 hour, I only want to get in at 12, 4, 8, 12, 4, 12, 4, 8, 12, 4. And this is the reason why. This is why. Because I'm going to draw it for you. I'm going to draw in this little corner over here, right? So here's my sell candle, right? And here's my buy candle. Like entry points, like knowing when to get in time wise will also save you a lot of money and stress because you only have certain opportunities, which is an even better opportunity. So let's just say we get in for a buy, right?
mm-hmm.
This is our entry point because buy candles start at the bottom. This will be our entry point in our blue candle.
Mm-hmm.
And let's just say this is 5 minutes, 10 minutes that the candle is going and growing, 15 minutes, right? If we get in, let's just say the next time we have to get into this trade is 2:15. If we get in at 2:15, right, this is going to be our entry point down here, right? Now,
Yeah.
if the candle keeps going up, we could be up 20 pips in 15 minutes because we got in at the beginning of the candle. Now, imagine if we get the trade idea late or we get in once the candle has been developing and we get at the 10-minute mark. Instead of being 20 points in profit because we
Like,
didn't get in at the bottom, we're only going to be 5 points in profit. Or the candle might decide that it didn't even want to get up here and it wanted to wick. But because you got in at the 10-minute mark, one, you didn't see that much profits, and the trade actually turned around because you didn't get in at the correct entry point, right?
nope.
Same thing with a sell. Now, let's just say we're looking at a 15-minute candle, right? We want our entry point to be up here as soon as the candle starts. So we would get in at 215, because if the market keeps dropping, we got a lot of pips. We don't want to get in at two, I don't know. We don't want to get in at 213, 212. Like we want to get, I mean, 216, 217, 218. We just want to get in as soon as the candle starts, because the further it drops from our entry point, which is at the open of the candle, the more pips we have. So if you are analyzing on a 15-minute chart, you want to count your confirmations. So let's go to the most recent candle here, because this is 15-minute, right? You want to count your confirmations, and let's just say we got a blue candle above the SAR. We got a blue volume bar. It's above the middle EMA. It's above the middle EMA. It's above the purple EMA. This line is still facing up. This line is still facing up. This is a 15-minute chart. Our next opportunity to get in is telling us when. And 4 minutes and 45 seconds is when we can get into the trade, right? And we're going to go in for a buy, because this is the candle we have the confirmations on. We don't just want to, like, we could just get in right now, but that's
Yeah.
going to put us in at the middle of the candle and not at the bottom of the new candle. Does that make sense?
Yeah, because then that's what I was like, well, then, before I do that, I would also want to see how much profit I can get out of it and see if it's worth it.
Mm-hmm. Well, yeah, and you just pretty much double check it by, you would just have to zoom out, and
Okay.
you would see, well, you actually can check the profit, and this is it's a good tip if you're using it for forex or HFX. So let's just say we see the market looks like, even if we put a horizontal line right here, it looks like the market is about to turn around, because that's what it typically does, right?
Yeah.
Right there. But if it doesn't turn around, we can also see when's the last time blue candles actually broke the patterns. Let's put another line there, right? And then we can use our ruler to count the pips from where the market is to where it might go, which is still 14 pips. Okay. Are you really ready to risk your account for 14 pips, or do you just want to wait for another trade? Like,
Yeah. That's why I say, because what I usually do is, I'll see like, okay, I see it, but then I go to like, okay, let's see how many pips I can get. I'll go to my 30 minute after that, and then I go to my hour, and then I go to my 4 hour. Now, if I don't see like it's going nowhere after that, really after that 4 hour, I'm like, nah, I'm gonna just wait for another one. See
yeah,
exactly.
yeah, because it's looking like, just based on the 4 hour chart with CAD it's looking like it want to keep buying, but last time it hit that point, there was actually a big drop. So not only that, we see that our line is getting closer and closer to our resistance. It's already under the EMA and is overbought. So if we can just wait for the SAR to maybe switch to the top, then we know, all right, we should get in for a sell, because we can get, just go back to where the last place it dropped. Oh my God, damn.
100.
If we
100.
get in for a sell now and we hold this trade for at least a day, that's going to be at least 185 pips, knowing that it's not going to break. Like we see clearly it's about to sell, literally. Like it's going to sell. Let's look at it on the 1 day. Okay, it's up for the day, but as we know, it's going to keep going up. It's getting closer and closer to that line. So if
Yeah.
we sold for the week, all right,
Oh,
go.
so that's how you know that your NZD is going to keep buying or selling.
Oh yeah, let me show you. Cause girl, I ain't playing. Look at this.
And I put that on my little questions to ask.
Because I literally just came in here, and we can see on the 5 minute it's been consolidating, but because I know that I want to hold this trade, I automatically start it in the hour. And then you just put your resistance line there for the sell, you put your line there for the support. It's looking like it's having a hard time doing anything, even on the hour. On the 4 hour, even if it does hit this place 377, it's going to drop back down for the day. Look at that.
Oh, and they still have a lot to go down.
Yeah, it still has a lot to go down, because the SAR didn't even switch yet, and that's just on the day. And on the week, look at that. It's just, it hasn't even gotten higher than right there for the week, and it's still dropping. Like even though it's overbought, I mean, even though it's oversold right now and it has to buy, we see that on the RSI, it's still dropping for the week. On the stochastic, it's still dropping for the week. I
And
still
then
have a
I
red
have
volume bar. Like it's going down. Like it's going down. So yep.
yeah,
And then even looking at it on Web Slinger,
then it's already
but
also saying it's going down even more after it hit that point too.
yep. So that's how I know. It's like we doing the same analysis, just different time frames. And because I know when to get in based on when I'm getting in. Look at this.
That's it.
For the day, like and I've been in since last night. And for the week, look at this. For the week, we
Oh,
got
this
the
is
red cloud
and it's
under the
just
red bars. This thing is going down. It's probably gonna be selling into next week because it's been consistently dropping. This is for weeks. So it's been consistently dropping for 1, 2, 3, 4, 5, 6, 7, 8. That's 2 months. 1, 2, 3 months. It's been dropping for freaking 3 months. And it's gonna drop until it gets all the way down to, and this is how you can set your pending order, your TP for your NZD if you want to set a TP. I'm just gonna let it drop for the entire week. But you can set your TP at 1.63240. Let's see how many pips that is actually. So I want to go for a short position. And I am going to have my stop loss at 1.63240. And
that's the only thing I don't like about stop losses. It'd be good for a minute to have, but then it also be like it's
it just, you got to make sure you enter in the right stop loss because I'm about to put my real entry point. My entry point was 1.71276. That was my entry point. That is where price is at. My take profit is, well, I don't have a TP.
so you can enter the trade without having a TP. You just enter it. Like, so do you just not enter both, or you just enter?
Well, because I know it's going to keep dropping, I don't really want to have a TP because I want it to go as low as possible, and I know it has the possibility to go as low as. Oh, I'm sorry, my stop loss should actually be up here. That's why it's backwards. My stop loss should be 1.67224.
Okay.
Okay. My entry price is that. I don't really have a TP, but pretty much, you know. So it looks like the market is going to continue to drop, and I was just trying to see how many pips, but it's looking like 720 pips that we will be able to get off of this one trade just because it's dropping for the week, it's dropping for the day, it's going to keep dropping all the way down to here. Um and yeah, it's just going to be a long-term trade, but we just got to have patience to not get out because it's in profit now. So yeah, of course you could just take profit and re-enter the trade every hour. Of course, because you know it's going to keep dropping. Or you could just hold, don't fold, and just stay in for the entire duration of the trade, red, blue. But you just know that we are going for at least by Wednesday.
Yeah.
Like, because for the last 3 days, if we look at these last three candles, it's dropped. It's going to drop at least another 72 pips. And then we could just get in for a buy because it's going to turn around. But yeah, yeah, girl.
So how do you feel about just being in the trade like whenever the market closed? So does the market still move whenever the market closed for forex? Because I know for HFX it still moves. So people do trade. Some people do trade when the market is closed on OTC. Is that the same thing for forex?
Well, for Forex, it's going to be completely closed. Like, there's no way to trade Forex during when the markets are closed. At least I don't know. But for HFX, I feel like as long as you understand support and resistance, then oops, I mean that. As long as you understand support and resistance, then you should be fine. Honestly. So let me
Yeah,
stop.
because I trade on OTC on my demo account, but I'm just